Friday, February 3rd, 2023, Monaco 64, home of alternative economics and contrarian views. Today we're going to look at how the Bank of England has sacrificed the currency to keep the housing bubble going, the housing market, to keep the economy from imploding. And yes, before I start though, I'd like to talk a little bit about why I started buying gold and silver back in 2002, so more than 21 years ago. Many of you remember, of course, the dot-com bubble. It burst around 2001, and we had a pretty severe recession. I had a private pension that I started paying into back in the mid 90s or so, and that got hit as well, even though it wasn't invested in the tech bubble. It was invested in other more balanced portfolio, but it got hit a little bit. And my wife and I sat down and talked about it, and we thought, for some reason, we said, why don't we buy some gold? And I'd never bought gold before. I'd never thought about buying gold. This was back in the spring of 2002. Maybe it was because I'd been reading a lot of Austrian School of Economics literature. I had read Ayn Rand's Atlas Shrugged. I've always been a free market guy, small government guy, but that really put me onto that path. So what did I do if I didn't know or had never bought gold? Well, back then we already had search engines, so I searched at work and I found a few bullion dealers, jewelers that dealt in gold and silver, and that's how I went about it. I didn't have anyone to help me. I did it myself. And I found John Haynes Jewelers in the city of London. Unfortunately, he's not there anymore, Mr. Haynes. But aside from having very nice jewelry, he dealt in gold coins, and his prices were very good. He didn't charge more than the dealers. I hadn't found dealers back then. I found John Haynes. And that's how I went about it. And then later on, I found gold investments in the city of London as well. And I bought some gold from them. I also started buying silver probably about 6 months later. And of course, there was the VAT on silver back then. And I always thought, well, you know, you have to, if you're going to buy it, you're going to buy it. It doesn't matter if there's VAT. And I remember once I bought the first, I think, kilo bar of silver, and it was the equivalent, the price was just over £3 an ounce. I think now we're near 20. So the VAT added about 60 pence, which percentage-wise is a big thing. But now that I look back, I don't really mind about the VAT on silver. Of course, if you can get it without VAT, the better. So that's what I tell people if they're interested. And many of you, of course, have asked me in the past where they can get gold and silver. And I think some of you have benefited quite a bit, especially in the last 6-7 years since I started this channel. And many of you know that the gold and silver market, the fluctuations in the price can be frustrating, but I think over the long term, it's something that you need to have, in my opinion, in order to preserve your financial independence outside this basically very fragile banking monetary system that we have. I could use words like corrupt and not fit for purpose as well. So I still deal, of course, with gold investments, as I said, and many of you here in the UK, if you're interested and you've never done it, or if you want to try it, details are below in the description. Make sure you use my promo code Monaco64. In North America, I've recently partnered with a couple of dealers because I never did. I just partnered with a UK dealer, but I get a lot of viewers from North America. First one is ITM Trading. Lynette Zhang and her team, of course, will give you a free consultation if you want to learn more about how to protect or even increase your wealth through precious metals. Details below in the description. And the other partner is, of course, Miles Franklin and Andy Scheckman, and he'll be able to help you. His team will be able to help you as well. Details below in the description. So now back to the Bank of England, and of course they met yesterday. They raised rates as expected from 3.5 to 4. I think there were 2 members of the Monetary Policy Committee, or the MPC, that voted for no increase. They think rates are high enough, even though prices are rising in double digits. They think that 3.5 was enough. But be as it may, the majority voted for an increase of 0.5% to 4%. But as you can see here in this FT article, central bank indicates rates may have peaked and now predicts milder recession than before. So why do I think they're sacrificing the currency to keep the housing bubble going, or the housing market from imploding? Well, because housing, real estate, is a very important part of the UK economy, especially when the government needs its tax revenues. The higher house prices, the more they'll get from that, not just through stamp duty, but through like inheritance tax. Can you imagine if the housing market collapsed, if they really raise rates to where they should? I mean, the rates should be at 15-20% really if they wanted to kill inflation. They'll never do that, of course. The housing market would collapse, and their revenues would go through the floor. So they can't do that. They have to pretend that they're fighting inflation. Jeremy Hunt, our Chancellor of the Exchequer, has said, "Oh, we're gonna have inflation," as if that's a good thing. So going from like 12 or 10% back to 5 or 6, that's still a really bad debasement of the currency. But there are a lot of people in our political class who are heavily invested into real estate, not just in their primary residences, but they have like others. They have buy-to-let businesses. Case in point, Jeremy Hunt's wife. And I heard from a close friend yesterday who is quite well connected. He heard from a Chelsea real estate agent. And Chelsea is a fancy part of London, in the West London, that Boris Johnson and his wife are looking for a new property. And guess how much they're willing to spend on this new property? £8 million. It's the same thing Tony Blair did when he left office. I think he spent £5 million on a property in the fancy part of London. These guys know what's going to happen. They know they're going to keep inflating, and that's why they're buying property, and that's why the people who are going to suffer, unfortunately, are young people whose wages, salaries are not keeping up with this house price inflation. Do I feel good about it? That my house, which is all paid for, no mortgage, is going up in value in this fiat pounds? Not really. I couldn't care less if house prices drop by 50%, because my house price would drop, but every other house price would drop as well. So, and I think the houses in central London, the fancy part of London, they would drop even more. But yeah, those are the people who suffer, and it creates division in society as well. Young people see people like me and others and politicians spending millions on houses, and they can't even they can't even get their foot on the property ladder. They have to rent. Rentals are not going to go down. So that's what they're doing. They that's the last thing they'll do, is to correct this real estate bubble, but it will somehow all end in tears. But one thing I would say, yes, the prices might keep going up, but the currency is going to keep going down. So in real terms, it's all really an illusion, I would say, even though it does affect the nominal price. This is what I found funny here from this article in the FT. It says the BOE's new central inflation forecast shows it thinks price rises will ease quickly from December's 10.5% annual rate to a level under 4% by the end of the year. So magically they think, wow, it's going to go to below 4%. And I have to give credit to Mervyn King, former Bank of England governor, who he really criticized this strategy of Andrew Bailey. I think it was over a year ago. He said that's the King Canute monetary policy, that inflation will go down because I say it will so. So this is what the Bank of England is doing still. And this is the kicker here. Inflation is forecast to drop well below the BOE's 2% target in 2024. So really wishful thinking, and they're going to burn the currency to the ground below 2% in 2024. We will see in 2024 if that works out. But my goodness, I think it's going to be more like 10% in 2024, and the Bank of England is going to be in big trouble. So let's look at the markets this morning. And after I look at the markets, we're going to do quite a few of the questions from last week. I haven't done the questions from last week. If you want to stay tuned for the questions, yes, it's going to be after we look at the markets. So we've got 8:30. It's 8:30 a.m. London time. Yes, very volatile move in gold and silver yesterday. Gold and silver were raging ahead early in the day, London time, European time. When the U.S. came in, the usual suspects, I guess. Gold and silver sold off. Yes, it's frustrating, but hopefully from seeing what is being done to our monetary system, our very ineffectual monetary system, you realize that you really need to have a little bit of gold and silver as protection. So right now we've got spot gold at 1914. It's up just over $1. High's been 1919, the low 1910. Silver, of course, looked like it was breaking out, but came back below 24. Right now it's down 6 cents at 23.40. High's been 62, low 33. Dow futures is down 90 points. The NASDAQ 100 futures down 266 points or 2%. S&P is down just under 1% as well. The currencies got hit hard yesterday. They were fairly strong early in the day. Pound was the major loser amongst the major currencies. Right now it's down another 0.25%, and we're below 122. The euro is down 0.1%, trading around 109. I think we got up above 110 yesterday. And the ECB, they raised rates as well. They said they're going to probably raise one more time and then probably pause. They're also in denial, like the Bank of England. The dollar is unchanged versus the yen, 128.70. And dollar's up slightly versus the yuan at 675. Aussie dollar is down a third at 70.51. The dollar's up a third versus the Canadian dollar, 133.50. And the Kiwi dollar is down about an eighth at 64.66. Platinum is trading at 1,028. That's up about $5. WTI crude is down about 0.2 at 75.88. Brent is down 0.2 as well at 81.98. The 10-year yield, U.S. 10-year yield is around 340, so not much change there. Today, of course, we've got non-farm payroll. That will be another big number. That's out at 8:30 a.m. New York time or 1:30 p.m. London time. So we're now going to go to some of the questions from last week. Try to answer as many as possible, and maybe do some more tomorrow or during the live stream on Sunday. Question 1 here is from Roddy Christodoulou, and it's from the video that I did, Britain's worst economic collapse in centuries. And even the mainstream is admitting that. It's not just me saying that. So he says, yes, we know UK is suffering great economic stress due to Brexit and the worst conservative government in the history of British politics. I have a question on another note. Why does America keep raising the debt ceiling? Why not use some of its gold reserves in Fort Knox? After this is the reason countries keep reserves. This adds fuel to the conspiracy that the gold in Fort Knox is not actually there. Well, gold is supposed to be there if you're under a gold standard with other countries. Gold is supposed to settle trade. So if you run a surplus with another country, that country is supposed to pay you in gold. So you settle your accounts. It's not there to pay off the national debt. But I agree with you that there's a lot of question as to whether the gold is in Fort Knox. As for the UK and the economic stress, I don't think Brexit or the government has anything to do with it. The UK has been down this path for many decades. Brexit is being used as a scapegoat. And I'm not judging Brexit either way. I think a lot of people, they don't do their homework and their research, and they're lazy, and they use the Brexit excuse. And if we had another government in power, we probably wouldn't be in any better shape, because it was the previous Labour government that put us down this road with a housing bubble that they helped engineer. Number 2, who says how much gold someone has when you cannot verify the accounting? Dean Myers, the end of fiat currency is 9. That's the video that I did with Clive Thompson. Well, yeah, you don't know, do you, if these official numbers are correct from the World Gold Council? You'd like to think they are, but whatever they may be, that's what we've got. Question 3 is from the same video, the end of fiat currency is 9. Warwick Avenue, how many basic ounces of gold should the average Joe have? Well, Warwick Avenue, it's like asking how much should someone save. So I don't know your circumstances. I don't know where you live. I don't know what your income is. It's just up to the individual. How much real estate, housing insurance, or car insurance should you get? I don't know. That's the same thing for gold and silver. They're just savings for a rainy day. So you need to decide. Question 4 from the same end of fiat currency is 9. From Keith Kennedy, what was the 1.7 trillion for, and the Build Back Better money? Where did it all go? I would think our government debt ceiling would come first. Keith Kennedy, it goes to all the special interests, the lobbyists that finance all those district of criminal entities, the congressmen and senators, to win the election. They pay them back. That's where it goes. It doesn't help. It helps the big corporations, unfortunately. Question 5 is from the video. Record deficit for December will shrink the pound in your pocket. From Pagan Morph. I have a small amount in UK premium bonds. Should I convert them to gold or leave them be? You might want to try converting them to gold or even silver if you haven't got any gold and silver and you want to try out for the first time. Premium bonds, yeah, I don't know how much, if they're paying an interest or if it's just one of those where you get like a raffle and you might win a lump sum. But premium bonds are in fiat currency. Question 6, it's not hard to be long oil and gold, says Tavi Costa. That's the interview I did with Tavi Costa. A question from Alain Roy. He says, in a parallel system where the CBDC and the dollar exist at the same time, does Gresham law apply in this situation? Which one is the good money? Any comments? I would say in terms of purchasing power, they're both bad. In terms of privacy, I would say the current system still offers you some privacy with cash. So we might see a lot of cash withdrawn from circulation. Yeah, but I would say in terms of purchasing power and wealth preservation, they'll be just as bad. But people might want to have cash because of the privacy. So that would be a new aspect that I think Mr. Gresham wouldn't have thought about. I don't know how long ago he was around, maybe just over 300 years or 400 years ago. And he was also the guy who helped found the London Stock Exchange, Gresham. Question 7, and we'll stop after question 7. We still have another 3, and we'll leave that to the live stream on Sunday. It's from the same interview with Tavi Costa, from Wim van Erd. He says, and uranium, question mark. Yeah, I think uranium is a good place to be, and I've done a few paid promotional videos on uranium. And yes, I think it's a good sector to think about investing. Of course, after you've built your own central bank with some gold and silver. So there you go. With that, I'm going to wish you all a very good weekend. Take care. Bye.